Some thoughts about the NPL market, discussions about bad banks and bad assets, or some principles of exit tactics and exit strategies. The Covo Group consists of several companies which are national as well as international in the area of consulting, troubleshooting, real estate and software development. Connect Market Entry Management, which was founded in 1995, is developing software for now 15 years. Union Estates Network SRL is the Italian version of Connect. As the first foreign Italian company focusing on the Italian market, Armsync Solution as a partner company was mentioned Plus as prime company concerning real estate bookkeeping. Armsync Solution is dealing with interfaces and synchronization management between bookkeeping software, data, property management and asset management systems. The Orga deals as a consultant service and troubleshooter with properties, real estate and portfolios, solving structural problems. NPL is for us no unknown area in the real estate area. Quadra is a sister company of Orga in Rome, Italy. Last but not least, ABC Software Solution GmbH deals with controlling big real estate portfolios and strategic asset management questions. It is planned to expand our business with partners, alliances to other European countries. To get a better idea, some data about the market in Europe. As you can see, Italy begins with 48 billion in 2007, slowing down to 42 for having in the end of 2009 some 59 billion euros in NPL. Germany is still the winner with 212 billion. UK increased from 80 billion in 2007 to 155 billion euros in 2009. Spain from 22 to 96 within 2 years. And last but not least, Greece doubled in 2 years the NPL sector value to 20 billion euros. Thanks to PricewaterhouseCoopers we got these figures, but depending on country reporting standards, figures can be much higher. To see the overall non-performing loans market, we divided in two areas. Unsecured loans, often consumer credits, and on the other hand, on the right side, secured, often mortgage-based or hypothecary credits loans. On the other hand, the market of real estate-based NPLs is even divided into sectors: retail and business, retail business and the commercial business. The retail business is characterized with smaller tickets, single apartments, one-family homes. Debtors are often private people and requirements of the advisor service are different. They are more focused on losing less of the loan in terms of margin. For that, they have an efficient call center, etc. etc. The commercial side, on the right side, is more focused on the property. That means bigger tickets, more real estate consulting and real estate experts. On the next slide you will see the complexity of the real estate to get a better idea. The real estate is an extremely complex product which has a relatively long lifetime. And the disadvantage is that the real estate is bounding to a location. Therefore the magic word location, location, location of the real estate is so important and price determining. Furthermore, a lot of different people have something to do with the real estate, legal as well as natural persons. They all have a more or less intense or direct contractual relationship. Look at the different roles which have to do exemplarily with the real estate. I would like to mention at this point that if we have a dysfunction of an organ by a human body, it would have a substantial effect on the human itself as well as on the fellow human, family, colleagues, friends, etc. It's the same when we get engaged as troubleshooter. The information about the real estate are incomplete, not up to date, not existing or wrong. The owner has mostly lost the interest to the real estate, and other roles or participants like craftsmen, servicer, tenants are unsure, dissatisfied, do not cooperate or often have no more positive basic attitude. Therefore our first job is to activate these people and convert the negative attitude in something positive, to ensure our project targets and to solve the property problems effectively. For a successful exit, the bank needs to proceed the following way. The first step for the bank should be a due diligence concerning all bad assets or their NPL portfolio. In the second step, they have to check their own resources concerning the management of these assets, considering the gaps and needs. And the third step is to define a flexible exit strategy. There are some rules concerning the due diligence of bad assets, real estate and non-performing loans. These are complete, that means you need all informations. The information has to be up-to-date information, for example, tenant list, cash flow, building plans, technical docs, etc. And the information are sensible to the asset type, because asset type determines need, values and fungibility. Our experience with DD processes, with due diligence projects, 90% of effort, energy, is to get the accurate information, and only 10% of energy is used to evaluate the information by experts, advisors. We use a specific own developed software application, web solution, to manage, structure these due diligence process and keep the results up to date. One specific thing is a so-called doc rating we invented. In our past, often the bank didn't realize how bad the information level about their bad assets or NPL real estate was. Where? So we use a doc rating, that means a rating concerning the quality of the information and documentation of the real estate as collateral. A bad rating means you don't know what you got, and with a bad doc rating you should not offer the NPL for selling, getting not a reasonable price but only hedge funds who use your ignorance. In the second step, you analyze, check your own resources to see the gaps, or you find out the gaps, needs to improve or limitation to realize certain exit strategies. Your people team and its ability, experience, knowledge and even motivation is most important in limiting your capabilities. For that, here should be considered to integrate staff working in other company entities or even external consultants and advisors to fill gaps. Infrastructure. Efficient IT applications are a must. Most banking systems we know are just dealing the loan mortgage recovery as a formal legal-oriented action, not integrating the management of the asset type or other consideration. Is your organization flexible enough to deal with so many different roles? Can you get easy access to other information partners, etc.? Room for action. Is the bank willing to give their own team enough room to work efficiently and with results, or even the authority to deal with involved participant roles? Last but not least, is there enough liquidity or the management decision to invest with accurate diligence, respecting on return on equity? The own resources, often not considering market resources, other abilities, are limiting an effective exit strategy or its realization. In history, we saw different strategies. Sell it. Biggest deal in Germany was Lone Star with HVB Bank with more than 3 billion euros. Transparency, due diligence, pricing was bad. Keep it and solve it, second strategy. Managing NPL situation internally doesn't work very efficient. Too many focused on legal matters, bureaucracy and bank rules are not fitting for troubleshooting and complex loan recovery. Mixed structure, which is according to us the best solution. Call it bad bank, SIP, Spanish model, the Spanish model for cajas, or active asset management companies founded in Germany. You see some of these. They take over the assets, manage these assets, and solve their problems actively and sell them for a market price in the end. The future, we will see this already in Germany, Italy and Spain, will be this mixed structure. This means a company owned by the bank, at least part of it, considering possible management buyout in the future, with highly skilled and trained experts. Your people team will be a mixture of highly skilled professionals working motivated with incentive models and including external advisory. Rules, organization, IT, even more real estate funds and asset management organizations needs integrated solution for the real estate management, beginning with a business case before purchase till the exit to sales. For the workout NPL structure, bad banks for this structure, this is even more important, dealing with in transparency and troubleshooting. Room for action. Is the bank willing to give their own team enough room to work efficiently and with results, or even the authority to deal with involved participant roles? I think that often here is still something to do because bank management limits this new structures, procedures, rules by banking-orientated roles, instead asset management and profit-driven motivated rules. Last but not least, is there enough liquidity to start up? And I'm sure it would help to find other financial models motivating investors to invest in share deals concerning single SPVs with real estates or even portfolios. Never forget that all the mixed structures, bad banks, SIP, are to solve and cure problems which were created in the past. We are focused on the future, so please criticize how to improve these structures and processes for the future. Thank you for your attention.